The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome. This is January 24th, 2013, and this is the Power Trading Hour, your humble and lovable and squeezable host, David White, on January 24th, 2013. It is Miller time. This day in, 1935. Canned beer started rolling off the assembly line. You know, when anybody ever says anything's good, it's all about night baseball. It's about sliced bread and canned beer. The wonderful cereal malt beverage accounts for about half of all the beer sold in the United States in a $20 billion industry. But I never could drink much beer, about one can. I think it's just it's so foamy and everything. It just fills me up. I never could drink it. Everybody, see these people, they call them Joe Six-Packs, that go home, drink a six-pack at night. I eat one. I drink one. I can't even eat dinner. But cereal malt beverages are very good, especially if you get the ones from England. Really like those nice ones that some people call them a loaf of bread in a glass. But it is nice. Now, I'm being called a lightweight by the peanut gallery in the engineering division of TFNN. And no, I had my share of adult beverages and way too many of them, but they were all high test. They weren't 3.2 Miller High Life beer. But I just can't, I think I got to about 30, 33 or something. Alcohol just made me feel worse the next day. I just kind of quit drinking it, but still loved it. Anyway, it is a good and beautiful day out here. Talking about a Sophie's Choice of Bear Bowl out here. It is one of those markets where if you're a bear, you can pick some stuff you like, and if you're a bull, you can pick some stuff you like. Probably the news inundated with Apple earnings. In fact, it's a little weaker than I even thought. I was looking for 465 as some level of support. It's about $13 lower than that right now at 452 and change. We were looking for 45 million shares to be the equivalent of the last 505 low on Apple. Certainly going to get that today. So you have a confirmed sell signal through that 505 level. Probably going to make an ABC down to the 390 level. That's probably not going to happen right away. The apologists and the, I'll call them the Apple deniers, because everybody always calls me a denier when they don't like my particular view on something. They all want to call you denier. So I'll call it the Apple deniers, believing that it can't go any lower. Most of them out there continuing to go on and tell everybody just how great Apple is. I put a report out in my Tech Insider that showed the breakdown and why Apple would start to fail. I'm going to have to get that and send it back out again. But I went through all the supplier stocks. This is what 3 months ago, whenever it was at $690, $700 or something. You looked at the supplier chain and they looked horrible. Why was Apple at an all-time highs, and the people that actually supply them, the cameras and everything else, starting to look rather poor already? And probably the feed-through was probably already starting to show in earnings, in the earnings call last night, which I did listen to. It's always kind of interesting to see what quote professional analysts are interested in, and they gave them a lot of softball questions in couched language last night, and it's always polite, but it's always kind of like the guy that as soon as you turn your back, he's going to bury the knife up to the hilt in your back, of course. But most of the analysts were probably watching the price actually fall the more and more Apple talked. What did it happen? There was basically no apologies. They missed the 50 million iPhone numbers that everybody was looking for. That was the whisper number. Some people were saying, oh, the whisper, they beat the whisper number. And they didn't. It was 50 million, and they didn't get it. And that's when the stock started to fail. In the conference call, all they could do, it was certainly almost Steve Jobs' reality distortion field. That's what they used to call it, when no matter what the reality was, Steve just said it wasn't. I reject your reality and insert my own kind of mentality. Well, the analysts pretty much were probably typing sell, 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 Mortimer, sell, get in there and sell. We watched it. It kind of bounced around back up to about 520 after hours and down to the low, 460s. Got down to a low of 450 today. But it's all about the margins, going back to my Tech Insider article. The problem was, will they, and especially with the new products, are they going to be able to continue to have those margins? It was in a trajectory that was ballistic, and probably the best way to explain Apple is what happens if you give a penny to somebody and then 2 pennies to them the next day. In 31 days, you have like $1.2 million, or 1.1. The power of compounding. If I give you 1 cent today, 2 cents tomorrow, 4 cents the next day, in 30 short days, you've got over $1 million. And most people didn't understand that that kind of logarithmic movement was based on 60-65% margins of the original iPhone 1, 2, and 3. Once they started getting to the 4, 4S, and 5, they are basically still kind of up at those margins, but especially with the iPads and other products they sell, those margins were taking a dramatic hit from the 60%, which is what Intel enjoys, to about the 30%, which is fairly industry standard, even on the high end of it. But what you didn't have is that ability to double, and double. And some people call it the law of large numbers. And that is just how hard is it to actually double your business every 6 months, or triple it or make it 10 times. Apple was on that logarithmic movement, and when it stopped, everybody still had projections based on those 60-65% margins, even though they were selling iPads. I actually put in basically a gross margin calculator in my Tech Insider newsletter, showing why I thought that and what everybody was going to be talking about today. So one accurate prediction. Even a blind squirrel finds a nut every once in a while, but I was pretty sure about that. Apple has followed almost the exact same path that it had in the 80s. It tried to follow a method where they were going after a big market, that they were not going to have a lot of allies, that they were going to make their industry a walled garden, meaning that they weren't going to let a lot of other people in that could conceivably become big and ever take any of their business. What that does is make an enemy of all the other people that do have big resources of money. In this case, Google couldn't allow Apple to control search. Google decided to do a real Oracle move, and that is the CEO of Oracle always said, it's not so important that we always win as much as they lose. And why Google does make some nice money off of the whole Android ecosystem, to them, it was more important not to let Apple be able to have total control of a marketplace. And, if they would have gone in very early, made real big and nice partners of Google, Android today may not be here. That is one of the primary laws of marketing high technology. There's a book called exactly that, Marketing High Technologies. It's from a guy named David Isle. If you search Amazon, you'll find the book. But there's a lot of rules that Davidow came up with. Davidow, I guess is the way it's pronounced. And part of it is how big a competitor you can go against. But he has some other rules, and that is that if the market is sizable enough, you better make allies and not try to control the whole thing yourself. We've seen an endless procession of companies over the last 30 years in tech try that. They have all ended up on the ash heap of history. I always like that saying from Ronald Reagan, the ash heap of history. Anyway, we're going to talk a little bit more about what's going on there. Well, we had, of course, two big stocks out last night, Apple and Netflix. Apple continuing to see pressure, and probably will be for considerable, probably next week. I imagine it's going to take a long time for this to sort itself through. I imagine you'll probably see some people trying to buy this, and I would warn you to probably stay away from it, both short and long, until you get a feel of the trend here. But it is it's going to be interesting. The other one which is very interesting to me was Netflix. It had a 27% short interest going in to last night's close. A perfect bear trap, if there ever was one. Icon has shown himself to be a preeminent operator in this stock. And you could see it as soon as the earnings came out. They pushed this thing up unmercifully on the shorts, and really gets to the point of what's going on today, which is this is feeling extremely like 2000, 2001 in the dot-com bubble. I am going to say right now there are some stocks in a bubble. Apple's bubble is burst. I suspect we're probably going to see the same thing in Netflix. When you look at their numbers, they don't add up. Does it really matter? We saw Enron, which was a total sham, continue on for a long time. Bernie Madoff went on for 9 years while people were actually telling everybody, and everybody knew around him that it was a fraud. The odds of him actually returning the amount of money that he said he did was the equivalent of the best baseball player hitting, let's say 950 for 4 years in a row. Even with that kind of statistical data, the SEC wouldn't look at Bernie Madoff's fund in the same way that everybody denied Enron was a shell game. These things can stay up here quite a while, and I don't think you want to be shorting Netflix tomorrow. But if you want to talk about blow-off tops, I suspect that we're seeing everything in Netflix. They have about $8 billion that's not really on their books that they're going to have to come up with for their content. We'll be back in just a minute to continue this. You give me a call, 877-927-6648, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As always, you can give me a call at 877-927-6648. That's 877-927-6648. We're talking about Netflix, and I think one of the things when you go through their books that they really don't show correctly is right now they have about $8 billion in forward investments in content that they really don't show how they're going to pay for. Yeah, they got 2 million more subscriptions back over the last 90 days, they say. I'm kind of curious how that all worked out. It's certainly at a much lower price point, but a much higher margin. And I think a lot of this had to do with that 25% short or 27% short interest in Netflix, which is what Bloomberg was reporting last night. But a lot of times these stocks just go to the moon. Is the stock probably worth $50? You might make an argument for that right now. That they're creating their own content. That this thing is going to be priced much more like a cable company, like Time Warner, or some of these other ones that actually are real cable companies. Makes a lot more sense. Its pricing is pretty much to the stratosphere right now. And I guess the idea is that no one's going to look at their books for a while. They'll be able to deflect this and keep a close eye on it. I suspect over time this is going to be one of these stocks that actually ballooned twice, only to be crushed yet again. and probably one of the best operators out there in Icon. If you've ever read Reminiscence of a Stock Operator, if you haven't, then go out and buy it right now. It's whatever, $10-13. You can also find copies online. But this is the penultimate example of a stock operator moving a stock where the underlying fundamentals and what was going on in that industry really haven't significantly changed. What they were able to do was get a lot of people bearish on the stock, continue to short it all the way up. They continue to be short, and it's easy enough for a stock or a CEO and a big stock operator to get in league and really blow out a lot of these folks. My guess is that you see a lot of the, just before it crests, you probably see a lot of options start to be exercised by the CEO, CFOs, and other executives in this company before it starts to move. So they came out with their earnings last night. What you want to be watching for are filings of options being put on or actually being exercised by the heads of this company. If you see that, then they know that they are close to a long-term high. And I think, this could take, a couple more months, something like that. You might see this thing hover in the 120, 150 range, and everybody kind of buy onto it. But there have been a lot of companies like this that end up being a lot of vapor and nothing really to squeeze on. And I suspect, unfortunately, I think Mark Twain said it, a lie can travel around the world twice before the truth gets out the front door. And unfortunately, just kind of like Amazon, no one looking at the numbers and giving everybody a pass on something that they wouldn't give most companies a pass on. And probably the easiest way is, and especially for an operator, is having a stock like this that is almost impossible to value. That's why you get numbers for Amazon in the 250 to 500 to even 2,500, depending on which way you want to figure it for price to earnings. Netflix, if you put that $8 billion back in that they're committed to, what does their earnings really look like? Well, they're not putting that in now. So over the same time frame, would they have enough cash to actually swing that Disney deal coming out in a couple of years? My guess is that probably we're fairly close to the nadir on Netflix for a long time when the reality of everybody else coming after them sets in. After the bell tonight, the most important earnings is going to be Microsoft. We'll talk a little bit about that when we get back. CLAC, Lattice Semiconductor, VeriSign, Juniper, all after the bell tonight, and we'll get through those and look at their charts and see if we can see anything in there. But just look at very high short interest rates, short interest in these stocks. And I recommend if you are going to play them before the end of the day, that you look at options. Certainly being on the wrong side of this and the equity is severely painful. But maybe play them after. I played one of the first, I think probably about the second one in the last 12 months last night after the bell. There's a little bit of money now to be made playing these quick draw moves with the volatility that we see. We'll be back in just a minute.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we continue, we're going to go through some of these earnings for after the bell for the stocks. And you can give me a call at 877-927-6648, 877-927-6648. We're going to look at a few stocks out here. One of the few out here that doesn't get a lot of press, but is following that pattern we've been talking about for a while, was Diebold last night. Came down on heavy volume, came back, filled the gap, came out with news, came down on heavy volume today. Again, of course, most of their customers are in the financial marketplace. That their news or forecast is fairly weak might give you some pause for those stocks in the XLF. Diebold symbol is a DBD, but it came down on heavy volume on the 16th of October on just 2.4 million shares over the last couple of days. What you have? 430,000, 500,000 shares, and the news out, and monstrous volume. Looks like it's going to run down to $27.66. Let's look at the XLF. Yeah, we're seeing a lot of these little dragonfly dojis up here at the top. A lower close tomorrow would get you kind of an abandoned baby or a shooting star. Sometimes people call them. They look fairly the same. But a good sign of a top in this marketplace. So we want to see what comes in tomorrow. I'm actually seeing many of these and we'll talk about those in the remainder of the show. Again, give me a call at 877-927-6648. What do we have in the financial sector? Pretty good indication this gap at about 1630 to 1660, 1670 from the 2nd of January. Probably wants to get retested. Is it the end of the world? No. If we start coming down with volume, yes. What we don't want to see is what we're seeing today, which is that these little spikes, nice little dojis up here at the top, and a pullback underneath these tomorrow. So if you are bullish on this and on this market, think we're going higher, probably keep an eye on a lot of these stocks. I suspect when I do my scan tonight, I'm going to find a ton of them. We were basically, they've been pushing this market pretty much all day. We're half a point under on the S&P cash, 2.7 billion shares. We need somewhere around 5 billion to make this highs stick and break through and go higher. Right now, seeing a lot of action on market makers pushing stocks on extremely light volume. In fact, I've got one challenging that I'm short that's challenging in the area of 1 million shares. In the first hour, it had maybe 50,000 shares. Just no volume in the early morning and through these pushes, and maybe short, taking out a few more shorts, but just not a huge movement in the underlying stocks so far, at least in volume in a lot of these. So we'll have to keep an eye on them. What do we have on earnings tonight? Juniper is the first one I'm watching. This thing is actually kind of broken above the last major high without extensive signs of strength. Is it enough? Did it equal the previous September 14th high? Yeah, you came in there and you had a couple of days where you had, you got up to, 7.8 million shares. So it did go over with higher volume. 10% higher means that it can go higher. Just it's not a huge sign of strength in Juniper, but it does have a legitimate breakout. I suspect, though, if it is like the rest of the stocks in these sectors that have been reporting, like Altera last night, we're going to see more weakness in this thing, probably come back tonight into the trading range, and we'll keep an eye on it. KLAC, another one. This one bounced very high or very hard on what was it? Click a few days ago. A sign of strength. Did fill a gap that had been around for a while, going back to August 18th, where it came down on heavy volume of 6.3 million shares. Came back up on that on a little over 7. So some of these stocks have gotten the kind of volume, at least to maintain these levels. So probably not a good short. Ideally, I think that CLAC could get up to $54. The question is whether or not a lot of this business isn't short covering by operators out here, in that you get no real follow-through in the next 3 days or 4 days. I don't like that. You should see a nice take off and then absolutely nothing, sideways move, always makes me a little nervous out here. Lattice Semiconductor, another one coming out after the bell tonight. This one could be wound up, and if you probably not a big deal if you get some downside news. But on upside news, this one has been consolidating since the middle of last summer. And you could get some nice movement, even down to the downside. But not a big indication. But you do have a lot of steam building in this, and it is the true definition of lower highs and lower lows over the last 2-3 months. And this is exactly what you want to look for a stock that's ready to break one way or the other very hard. I'd be watching this one on good news, maybe a good play after hours tonight. If you can catch it quickly, because it could be a lot of people on the wrong side of this one also. Microsoft, probably the biggest one tonight, is filling its previous gap on extremely lighter volume. This thing gapped down on the 13th of November on 131 million shares, actually almost 132 million shares. What do we had last day. Yesterday, 50 million shares, 65 million shares now. So we are getting into this. It's going to be about 50% of the volume. I suspect that Microsoft is probably not going to come out with any kind of earnings that are going to drastically drive the stock higher. I would say maybe $1 higher and $2 lower on the earnings call tonight. But since so many previous Microsoft employees have come out and are willing to basically diss Ballmer, who is the current CEO, about the way he's doing things, and also let everybody know that Ballmer wasn't beyond firing anybody that looked like potential competitor to him to the CEO seat. This guy was with Microsoft for 24 years, 25 years. Forget the guy's name. He's out hawking a book this week. But he wrote it before even the current round of firings, where most of the people that consider the heir apparent to Microsoft's CEO position was fired just a couple of months ago. Saw the same thing in Apple. And most people, let me put it this way. I thought at the time, within 2 weeks of each other, that it was a fairly coordinated effort between people like at the highs of, or at the head of Apple and Microsoft to get rid of anybody that could be put into their positions in a day that was inside the company. And I consider that that's probably still there. A bad news tonight probably means the end of Ballmer. Last year they gave him a pass on the last fiasco for Windows Phone, where he spent about $450 million in advertising and sold $40 million worth of phones. Right now at the Surface, he's spending $1.5 billion pushing the Surface, and guess what? It hasn't really returned fruit yet. I think it's probably not all that bad. But at this point, I think Ballmer is doing more harm than good. The best thing that they could do is say that he's retiring to spend more time with his family, which is always code words for getting fired, and put somebody new in his place that isn't a CFO. I think we see parallels that, if you listen to the show for any length of time, that I hate, which is tech companies being run by the CFOs or previous CFOs of that company. We've seen it in Apple. We see it in Microsoft. I've yet to see a CFO really move a company. The personality types needed for a CFO and an accounting type are not the kind of things that you need in a wartime CEO. And certainly, if you watch The Godfather enough, I want a wartime consigliere in a tech company if I want it to grow, not somebody that's just going to water the existing flowers. It's like the other part. Just wet my beak. What is that, Godfather 2? I just need a little money to wet my beak. Well, that's I think that's the thought for a lot of CFOs. They're not thinking that they're going to go in and hit the home run, and are not willing to take the risks necessary to make these companies grow, and go and take a little bit of the easy side, which is never the one that's going to win in battle. We also have VeriSign out after the bell. This is another one that just got blown apart. It's coming back up to previous gaps down. If you were looking for another one that could considerably have some very deep downside after the bell, it's got everything you want. A huge high volume low out here on November 30th. I didn't look at the options on this. I figured during earnings it's just going to be too tough, and they're probably very expensive. But maybe a good one to play out here if they fail. Probably high short interest also, so look for probably some decent volatility in this one after the hour, after the bell tonight. Anyway, I wanted to get to some other stocks that we've been talking about the last few weeks. One of them is another one that is giving these patterns, which is these nice little dojis and these dragonfly dojis up at these highs, especially when these stocks did not break out on any kind of considerable volume. Agrium, AGU, I've been watching here for a while. We've been talking about it. We got the little bounce today, and what do you look for? 2.1 million shares. We've got about a million, probably going to end up with about 1.1 million shares and a nice little doji. A confirmed sell signal would be any kind of close back below 108.42, as long as that continues to be well under that 2.1 million share high that goes back into the 25th of November. But as we continue watching these stocks, we've been talking about agriculture here, in that we've had some breakouts that I consider breakouts without any continuing signs of strength. Market Vectors Agribusiness ETF is MOO, and that one's got, depending on how this thing closes, may put up a little hammer candle out here. At the same time, you want to watch stocks like Corn's ETF. We've been talking about how this thing looks like it might be making the next ABC down. Get in a nice little, let's see, here we go. 49, there we go. This thing's done a 46% retracement, and but it looked very weak. You had volume only on one day, and that was on the 11th, even though some big news came out on that day about there being a few more cows out there to feed. This did not really follow along other than that day. And actually, the action on that day wasn't that terrific either. Had to follow through the next 5 days. This thing is starting to roll back over. And if you're watching a lot of these agriculture stocks, kind of interesting, but keep an eye on CORN. I suspect that some of this weakness is based on the higher cost of transport and not on maybe directly on the supply and supply and demand of corn itself. Probably a little bit of that bounce was thought of for the closure of the Mississippi River, which still seems to be in doubt, but they can't get barges up the river that are basically any more than half full, so continuing to be a little bit more expensive to ship grains, salt, corn, and coal up rivers. Another one that's kind of interesting out here is Sotheby's. When we've been watching this thing up here at the high on half volume, looks like maybe we've got a top forming in on this. The last major high was September 10th, $36 with 1.5 million shares. Over the last few days, we've gotten a high within 0.5% of that at about 640,000 shares. So coming in at just over a third of the volume of its previous highs. Not seeing a lot of strength in breakouts in these. Diebold, we talked about that a little bit already. What else? EOG Resources, another one of these companies heavily into the price of natural gas. What we've seen here is another breakout above the last major high without a lot of strength coming back in. In EOG, I'm looking at the November 6th high of $124.49, 4.2 million shares. So what do we have? Anything that looks like that volume over the last, let's say, even 15 trading days? Absolutely nothing. So you get to these highs, the volume turns into vapor. Be very, very scared, children. Be very scared. We're going to look at a few others that we've been following over the last few days. You can always give me a call, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
As we come back, we'll look at a few more stocks here before the end of the day. Halliburton is another one that we're watching up here. This one's had short about 5 million shares up here at the high. Got to 38.23 again today. But we're seeing a lot of these stocks that look rather stretched. This one actually has had very light volume all the way back up to these highs. I suspect energy is one of the that if we don't get a breakout, that we're probably going to have a nice trading range setting up down below. But I think that kind of looks like in all commodities. We see that same kind of weakness in gold. And some other ones out here. Another one that we want to be watching very closely is the IYR, which is the Real Estate Index Fund. Another one up here that's had very high volume in the last few days, but has failed to also break out of these highs. So want to be keeping an eye on that. This thing has gone. It's still 23 cents under the previous high out here on September 14th. But as we get back into these, another one that has a gap, but not too much lower below it. With this light volume, if you were a bull, probably the best thing would be for a minor pullback into that 65 region on the IYR, and then start seeing volume come back in to actually break out. I'm suspecting we may get a little bit bigger pullback as we see sector rotation really move in this market. Another one out here is Open Table. This one has been another one, go back a little bit even farther. High Flyer. This thing has been traveling a little higher, but it's not really getting kind of volume you'd like to see up in these higher highs. With the last couple of minutes, I saw something on the news last night, and I'm trying to stay away from the political side of it, but it made me think of a movie. Probably one of the times in my life that things weren't going on so well, and I was probably ethically challenged at the time, and this movie kind of came along at the right time. I was out in California probably for 2-3 weeks. That was fairly common in the early 90s when I was calling on customers, working with a lot of people in Hollywood. This movie came out, and but what really brought me back to it was Hillary Clinton said, "What's the difference? How's it going to matter?" And if you haven't seen this movie, it's probably a great one to maybe find on Netflix or one of those other streaming sites. It's called Leap of Faith. But a nice parable in the movie, and probably says why it does matter. Why basically Steve Martin stars as a kind of a con man, and Liam Neeson as the local local hick police chief, trying to talk him out of leaving town and taking all their money on the way there, and praying for rain. And a very sweet movie. No car crashes, no shootings, but a very smart movie. Really enjoyed it at the time, but when people say that what's the matter, it's not going to change anything, probably a good movie to watch out there. I think Hillary's going to regret saying that one day soon, but a fairly decent movie out here. And if you're looking for something that's a little off the beat, one of my more favorite movies out there, and that's not horrible Terminator or any of the other movies that are now basically living on special effects without a decent script. This was a movie well executed and with a script. So keep an eye on that. Leap of Faith, 1992. I remember sitting in the theater in the quadruplex with 100 theaters in it watching this movie. But you all have a great and safe evening. We'll see you tomorrow. Same bat channel, channel 14 on Tiger TV. Same bat time, 2 o'clock Eastern. We'll have our appointment then.